All right. It's Tuesday. It's 5:30. Got the whole chat going crazy right now. Thank you guys for joining us. Welcome to a new edition of What Are Your Thoughts? I'm here with Michael Batnick as always. Michael, say hello.
Hello, hello.
Is that Fred like the data source?
Yes.
Okay, because I was worried. People didn't know what a nerd you were. So it's important that we make that clear from the outset. You use a lot of Fred data in your posts or not really?
Most everything that I find in Fred, I can find in Y charts. But
right.
Yes, I have been known to use Fred from time to time.
Yeah, no, it is the best.
And I like that all proceeds for the shirt went to the Federal Reserve because they need it.
That's true. Fred is offered by the St. Louis Federal Reserve, right? That's their bag.
Just trying to pay my fair share, you know.
All right. Hey, we're super excited to be here. Just got notification that New York State is officially outside. We have no more restrictions. I feel like I can do whatever I want. I'm pretty excited about it. All right, let's see who's in the house tonight. Tom Whalen is here. Carol Matzenbacher is here. Steve Leon, Jeffrey Cully, James Hardcore. Is that your real name? Francisco is here. Wavy McFly is here. Frank USA, Joseph Lane. Everybody's here. It's going to be an amazing show. We have so much to get to. Can't wait. We're going to go right into our Y charts titles sheet, and then we'll get into it. Duncan, hit the thing. We love Y charts. Y charts is how we create all our charts, not just here on the show. We use a ton of Y charts on the blogs. You guys have probably seen. If you haven't checked them out, there is a link in the description for first-time users. A nice discount for being fans of What Are Your Thoughts? Okay. Jamie Dimon scared some people with his comments this week.
Not me.
Not me either, but some people. Never me. Let me set this up. I guess he spoke to my pal Wilfred Frost about how the bank is positioned for inflation. Here's what he said, quote, "We have a lot of cash and capability, and we're going to be very patient because I think you have a very good chance inflation will be more than transitory." Diamond disclosed, blah, 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 blah. What else did he say? Oh, $500 billion in cash uninvested, which I'm not quite sure the mechanics of that. That sounds like a very big number.
Is this Jamie Dimon or Jeff Gundlach? He sounds like a bond fund manager.
I don't think he was saying it to scare people, but here's what he said. If you look at our balance sheet, we have $500 billion in cash. We've actually been effectively stockpiling more and more cash, waiting for opportunities to invest at higher rates. So what he's not doing is saying there's about to be a stock market crash and I'm getting liquid. What he's doing is saying, I think I can maybe get a 10-year treasury at 1.8 versus 1.5 or a 2-year note. And those minor differences wouldn't make a big deal to most of you guys, but it would make a huge deal to a bank the size of JPMorgan. Is that
for sure
what you took from it?
No more, no less.
Okay. I think I wanted to ask you, if you were the CEO of a bank, would you even be saying anything like that?
That's a good question. I wonder if he regrets. I wonder if he's like, why did I say that?
I think he speaks very off the cuff.
He's so seasoned, though. He's got to know. I don't think he makes mistakes. He said what he wanted to say.
Let's say all of a sudden we see rates start to creep up and we see taper talk and blah, blah, blah. It's not like he's going to come out and say, okay, we put money to work. Like, it's not a hedge fund. He's not going to.
Right.
Nobody should expect that he's going to do that.
They hit my price target.
I was on an airplane with a guy next to me who worked on like a very esoteric fixed income trading desk at JPMorgan during the crisis. And he told me this great story. By the way, full disclosure, I'm a shareholder in JPMorgan and we do business there. That's our firm's bank. He told me that during 2007, Jamie Dimon kind of was like newly installed as the CEO at the firm. Remember, they bought Bank One, which he was the CEO of. And he went floor to floor talking to fixed income desks. And he would make people like sell a little bit just to test the market. He'd be because you had a bid and ask for all this stuff. And he'd be like, All right, prove it. Prove that's where the price is. Sell
That's like
5 million worth.
That's like what Elon did with Bitcoin. He sold just to see if there's liquidity.
Just to see. No, but like this guy worked there. He wouldn't make the story up, I don't think. He's like, so we tried to sell 5 million and the bids were way lower in real life than where everything was being quoted. And that's why, one of the reasons why JPMorgan got liquid or got out of a lot of stuff before everyone else, because they recognized that it was a Potemkin village.
A what village?
A Potemkin village.
Hit me. I don't know what that is.
That's like when the Russian Tsar went up the River Volga to survey
where do you come up with this
how
shit?
the
What are you
country
talking
was
about?
doing. And they built fake towns like in Hollywood. They just built the front of buildings and stores for him to be able to put on a show for foreign visitors. That communism was working really well. But it turned out that it was all fake. You never heard that term?
No,
all right,
never.
we're getting very far afield. Do you think
Actually, speaking of Potemkin villages, no, I'm only kidding.
Okay. Do you think that other banks take their cues about what they're going to do with their capital and try to mimic what Jamie Dimon does at JPMorgan, or probably not? I don't know.
Yes. Yes. I just listened to a podcast with Jim O'Shaughnessy all about mimetic behavior. And I think, yes, we copy people. So certainly when the most powerful banker in the country, outside of, I guess, Jerome Powell, but, you know, a real bank says something, people listen for sure.
I think the Fed has to listen to him too.
Absolutely.
And maybe that's who those comments are meant for.
Actually, I just wanted to mention real quick, Duncan, we have this chart. This is a neat chart. Throw this chart up. So what this is showing you on the bottom is core inflation. On the side is bond yields. We've never had bond yields this low with inflation this high.
So inflation's 2.5%, give or take.
Well, it depends what you're looking at. Those numbers are around whatever it was, but basically the bond market is looking past this and saying the bond market is saying no inflation.
My bet is that they start using the taper word at Jackson Hole, and by the end of this year, like let's say November, December, they start paring down the actual asset purchases.
Is tapering going to send yields up or down? I know it sounds obvious, but I don't think it is.
We had Brian Belsky on CNBC the other day on Halftime Report, and I asked him, I'm like, everyone seems so sure that the taper is going to lead to a panic because it did in 2013. We only have one example of this.
That was because that came out of nowhere in 2013.
Now everyone knows it's coming.
Right.
Yeah, so what if people go like this? Oh, thank God the Fed is finally going to stop buying assets. I can't hire people. I can't pay for stuff. Like, what if it's met with people cheering and buying assets because they feel like the Fed is reasserting control? I don't know.
Certainly possible. I don't think I would bet on that, but it's certainly possible.
Stranger things have happened. All
right,
right,
so
where do you want to go next?
There was this wild cover on Barron's this weekend. Teen traders, they can't vote, but they're old enough to buy stocks. So we've beaten this to death. I don't really want to get into the usual topics here, but just throw these two charts up. So there's new investment accounts opened in 2020, broken down by age, and young people, 18 to 29-year-olds, 20% of new accounts, and that's got to be millions of accounts. Percentage of Americans under 35 who own stocks, basically at an all-time high, right in line with the dot-com bubble. So young people own stocks. Cool. We already know that. What I want to talk to you is the business angle of this. So in the Barron's article, they said financial technology apps for the young raised $344 million in financing last year, according to Crunchbase, up from $98 million in 2019. 98 to 344.
What are
What's
these
that?
apps?
So we'll get to that in a sec. This is interesting, though. In the article, somebody said it's a customer acquisition play. The earlier you build the customer relationship, the longer you have it. So true. At least I'm proof of that. My first bank account was at Chase. I'm still there. I don't love Chase. They're fine. It's where I bank. Like, I have no loyalty to them, but it's a pain in the ass to move. I'm not moving.
Inertia is very powerful in financial services, and people feel as though once they know something works well and they don't have to screw around with it, they tend to leave it alone. And I do think, we've become so accustomed to looking at cheap bank stocks on Wall Street, like Wells Fargo, and being like, oh, it's so cheap versus earnings or book value or cash flow or whatever. That company is not getting young people opening new accounts. They're opening
Nope.
at SoFi. They're going to get their lunch eaten. It's not going to happen in 1 year. It's going to be glacial. But then one day you're going to wake up and you're going to be like, wait a minute. SoFi has as many trading accounts as Merrill Edge. Like that's a thing that's literally going to happen.
Oh, did you see? This is an amazing quote. I forgot to say this. Diamond said about You Invest, their service. It's got about $50 billion in assets, so it's probably Robinhood or bigger. Diamond said, we don't even think it's a very good product yet, and they just said they have $50 billion because that's what the clients are.
So that's less impressive to me than the startups because
it's there. The money's there.
Yeah, they're moving money from the left pocket into the right. I look at that the same way as I look at like when Vanguard was announcing all the progress they had made in their automated advisor. It's like, no, you're just moving money from the call center into an email product. It's not really new money. I'm sure it's some new money.
There's going to be some cool products. Throw this green light up. I think I heard of this, but I wasn't really familiar with it. It is the money app for families. Raise financially smart kids is their tagline. Cool. It looks like there's debit card for kids. Parents can control it. Allowance on autopilot. I love it. There's going to be all sorts of really neat technologies that are being built right now.
I heard you get an email from Greenlight on your birthday from David Einhorn. So that's kind of like the whole family's birthday. So that's kind of cool. What does that mean? You can have accounts for your kids on the app alongside yours?
Yeah, I think so. So you could track their savings. You could teach them good financial habits.
There's gonna be way too many of these eventually. I don't know how many is too many, but like most things, there'll probably be 3 that end up controlling the whole game.
Anyway, $345 million in funding. So they're being built.
Yes, and that's I think what your point about like having people on the platform early in their life is really important. We started liftoffinvest.com for the same reason. Oh, let's pull that up. Duncan just flashed this chart. I was going through SoFi's investor presentation. Do you see the bottom numbers year-over-year growth? This is quarterly. It's actually accelerating.
Yeah, they're getting bigger.
As the company gets bigger, the growth rate is accelerating. And this is the total products. They say 3.2 million total products and 2.2 million financial services being delivered in Q1 21. So they are expanding the amount of products they offer. Their growth rate is accelerating as they get bigger. Didn't they just get the naming rights for a big stadium? What?
Yeah, they did. I think the Charger Stadium. By the way, those charts look a little bit bullshitty. What 3.2 product?
Well, it's Silicon Valley, so of course they're bullshitty.
Yeah, come on.
Okay.
I'm not buying this.
There's nothing unexpected there. That's going to be. I think that's going to be a very big company, and it seems like all the right people are behind it. So I think that one will work. All right, where are we going next? Oh, speaking of big companies, we're going to do this FANG thing.
By the way, it literally says it on the black screen. I
know. I'm not good at that. Apologies. I think the FANG stocks are ready to go. So,
I think so too.
Yeah, forget about the technicals. Just like if you think about what's going on in the first half.
Fundamentals?
Energy stocks are up 45% since the start of the year, which I was looking at Krinsky's stuff today. It's the fastest start for energy stocks ever. And they're up more than double the second best sector, which is financials, which are also having a great year, up 25% year to date. You annualize the rate of growth in the energy stocks.
Who's doing that?
It would be up 100% this year if it keeps going. I don't think it will. Yeah. So I think the money rotates back to where it's been treated best over the last 5 to 10 years. And a lot of these large cap growth technology names have been biding their time. The charts don't look bad.
So
they're consolidating.
So this would just be chef's kiss. So leave this chart up here for a second. So you've got Facebook, Google, and Microsoft at all-time highs. Netflix hasn't done shit in a long time. Same thing with Amazon and Apple. But they're starting to go. And listen, I don't want to play a technician, but this chart is looking pretty constructive to me. No?
Do we have charts of any of these names individually?
I didn't. No, it's too many.
All right. Netflix should be kicked out. I don't know why we keep mentioning it. It should be NVIDIA in that slot. NVIDIA is a $400 billion market cap now, and Netflix is $200 billion.
How about we just bring it in? Bring it in. Don't need to kick. The more the merrier. The more the merrier. Don't kick Netflix out.
Why? It's not really a giant. Like I get it. We watch it all day. But
I don't even think it's not even $200 billion, is it?
Yeah. So I think Nvidia should be there. What did I want to say? Oh, all right. So now you look at some of
$218
these
billion for Netflix. Sorry, go ahead.
you look at some of these charts that are consolidating toward the top of their range.
Like what, Amazon and Apple?
Yeah, I mean in
Okay.
particular. Now, Amazon is not even hiding it. They have this moment where like you have basically a divided Congress. Biden is probably out to lunch on this stuff, or has bigger fish to fry. Amazon's going to start moving very aggressively in the second half of this year into prescriptions. Like they're not pussyfooting around. They're like really
I was
doing
about to. What does Biden say? Now look here, Jack. What does he say?
What did he say?
I don't know.
missed that.
What's it? Whatever.
All right. The global prescription market is going to be 1.5 trillion in
Prescription for
2025.
what? Like health stuff?
Prescription drugs.
All right, what does that have to do with Amazon?
North America is about 400 billion annually. Private
What
health
does it
and
have to do
medical
with Amazon?
insurance, 1.1 trillion per year in the U.S. Does anyone want to bet that Amazon won't take as much market share as they feel like taking? Like, would
From
anybody
healthcare?
want to be on the other side of that bet?
From healthcare?
From health insurance, which they're doing for their
No,
own
didn't
employees?
they just shut it down? They shut it down, didn't they? Their joint venture with Chase and Buffett.
Yes, they're going it alone. They are rolling out health insurance for their employees, and the next step is for their customers. And in the meanwhile, prescriptions are going. It's going to be like a universal price on a monthly basis. Get whatever drugs you want from a certain list. They, I feel like they're going to run the table. Like they're going to mow down everybody in sight. I can't imagine it being otherwise. If you are already paying them as a Prime user, and then they say add $2 onto your Prime plan, and we're now going to send you your drugs on a schedule every month. Who the hell is saying no to that?
I don't know anything about the healthcare system, but is it really that easy that they're just going to go in there and mow people down?
It's not. They have to be in every state. They can't just roll out nationally. But they acquired PillPack. They've been preparing for this for a while. Bezos bought a big mansion in the suburbs of Washington, D.C., specifically to wine and dine people in Congress all night.
For the Post.
Well, listen, he's clearly going in that direction now, and I can't imagine anybody stopping him. So you just think about adding a market like that onto Amazon where it is right now. It seems unstoppable, and I don't think there will be the political will in time. And once he has customers who love it, it becomes impossible to shut down. So I feel that Amazon's next leg of growth begins like today. Apple, same thing. Hiring Tesla engineers, General Motors engineers for the last 3 years. Does anybody want to bet that if and when they put out something automotive, it won't be a smash hit? I wouldn't want to take that bet. I mean, not everything they do works, but almost everything. And even things that originally don't appear to be working, like the watch, eventually people realize, oh, wait, this really is working. So
No, it was a good call. Your General Motors stock. You were getting dunked on. That was like months ago. Long time ago.
I think it's up 100%. Still in it. All right. Let's go to billionaires.
All right, where are we going from here? Oh, there we go.
You're up.
That was where the hell's my doc? I was clicking around. I lost my doc. Here we go. All right. I kind of regret choosing this topic because it's pretty negative. But this article sucked. It was an op-ed in the New York Times. Warren Buffett, the myth of the good billionaire. This guy wrote, "There's no way to be a billionaire in America without taking advantage of a system predicated on cruelty, a system whose tax code and labor laws and regulatory apparatus prioritize your needs above most people's. Even noted good billionaire Mr. Buffett has," and this is the part that irks me. "Even the noted good billionaire Mr. Buffett has profited from Coca-Cola sugary drinks." What? Amazon's union busting.
If you apply that,
hold on. Chevron's oil drilling, Clayton Homes predatory loans, and as the country learned recently, the failure to tax billionaires on their wealth. Come on.
if you apply that standard to everyone in America, everybody is just as bad. Now it's just size.
So, and this also is nonsense. And this points to another way in which the good billionaire is hard to deal with. The crooks and the scoundrels and the people manifestly looking for quick PR highs come to philanthropy for the marketing payoff. So Mackenzie Bezos donated $2.7 billion today. Here's a quote from Buffett. "I believe the money will be of more use to society if dispersed philanthropically than if it is used to slightly reduce an ever-increasing U.S. debt."
Yeah, I think a lot of billionaires probably feel this way, where if they had more of a say over how it would get used, they would probably be less predisposed to despising paying taxes. I mean,
and I think we spoke about this last week. I think billionaires paying $0 in federal taxes is total horseshit. I hate it. But like the more that we like divide and throw mud, like let's bring people up instead of trying to pull these people down.
This piece at Intelligencer, which I guess is New York Magazine, basically makes the point that you barely have the wherewithal, like from the American public, you barely have a mandate to even slightly raise billionaire tax rates. And even if you did, A, it wouldn't be enough money to accomplish anything. And B, it really wouldn't slow down the wealth creation for people.
It's almost like
Bezos.
It's almost as if billionaires have influence.
Yeah. No, but like unless you're going full on progressive, which the American public is not there. That's not where the public is. People don't generally like the idea of penalizing success, even people in this country who have yet to be successful, because I think something that's unique to American culture is the idea that everyone's about to make it. So like, I don't think it's popular. And then I learned a new word this week, limitarian. You ever hear that word?
Is that like a Potemkin Village thing?
Potemkin Village? No. A limitarian, it's a made up word, but a limitarian is this new burgeoning movement of people who think that there should just be a number. That's the upward limit of wealth. And then every dollar after that should be taken and distributed into the real economy so it could start like working, so it could start moving around the economy.
Let's start giving babies shares in the stock market. That's my idea.
I love that idea. Or I don't know how you would do it, like how much money is enough that it would actually make a difference, but I do like the idea conceptually speaking. I'd rather give them the money at 1 year old than when they were already in college. Because I think if you start people off on the right foot, you almost won't even have to pay for college if you do that correctly. Anyway, I don't think that the article that came out is really going to change much. I just don't think there's the political will to start confiscating money from billionaires. We've never seen it.
Where's the limit? Are you a limitarian?
No.
Where's the limit?
How you would do it? How do you set the limit? There's a school of thought that says every billionaire is a policy failure. I don't really subscribe to that.
Come
so
on. What about all these entrepreneurs that have created wealth and built these companies and got wealthy through stock? It's not a policy failure.
Well, that Times article basically says that Buffett, who's probably created more jobs than almost anybody we can think of right now, either directly or indirectly, is, quote, the most dangerous kind of billionaire we have. The worst billionaires are the good billionaires.
Not productive.
Yeah. Later for that. Miss me with that. All right. What are we doing now? Oh, you want to talk about a bubble? I'll give you a bubble.
Let's do it.
A bubble in the making. Buy now, pay later. Why are these all multi-billion-dollar companies? It seems like the easiest thing on earth for every bank and every credit card company to just add a button and compete with them. So the article
that is the most bullish sign ever. Those words.
It's so easy to compete with?
Yes.
Sometimes it ends up being true though.
Yeah, but not usually.
Okay. Klarna. This is a Swedish company. You and I are investors in this,
right?
Through Equities N. So I'm talking against my book. We just bought some in the fund. Klarna on Thursday announced that it has raised $639 million at a valuation of $45.6 billion, an astonishing quadrupling in value in just 8 months. Klarna's business is on fire. They said that their number of American customers is up 118% over the last year. It had 18 billion in transaction volume. Most of that was in Europe. There's another one called Afterpay, which had 4 billion in volume, and Affirm, which was 2.3 billion. Affirm is public.
Let me give you some numbers on Affirm. Yeah. Gross merchandise volume for the second quarter for Affirm was 2.1 billion, an increase of 55%. They have 4.5 million active consumers. Total revenue for the second quarter was $204 million, a 57% increase. So it looks like it's on a run rate to close to $1 billion in revenue. I'm sure they're still losing money, but these are businesses, dude.
Okay. PayPal launched Pay in 4. Is that what it's called? Same thing. Pay in 4.
So what's your point?
4 installments instead of one. It's the same
Dude,
thing.
how many banks are there? How many credit cards are there?
So speaking of banks and credit cards, if the top 5 credit card issuers all added this feature to every e-commerce site where they appear, then why would you click on the Klarna button?
They're not going to. They're not
Why
going
wouldn't
to.
they?
Because the margins are dog shit compared to what they're getting. They're not going to do it.
Why do they have to be dog shit? Why can't they apply an interest rate over the course of 4 payments versus 1?
In a lot of cases, these are interest rate free. The merchants pay. With Amex and the other cards, you get like a 2 to 3% transaction swipe fee. Dude, you get late payments, interest. Credit card companies are not getting into this game. I don't think.
If I'm MasterCard, even if it cannibalizes 0.1% of my e-commerce opportunity, I just decide if this is the way people are now going to get comfortable buying things, I want to be there.
They're too big.
PayPal's not too big. PayPal's
I'm saying
not a credit card
these
company.
companies, again, I'm making this shit up. I have no idea, but I'm just going to guess that they're too entrenched. They're not interested in this.
I don't know. I feel like there's
everything is copacetic. They're not going to rock the boat. Imagine bringing this to their board.
Oh, Apple has this. Buy now, pay later. They call it 4. So Klarna is not sneaking on. Oh no, that's not theirs. That's a third-party app. I don't know. I feel as though Amazon and Shopify can basically put an end to this right now with their own versions. I just don't see why, if there is a great business there where you have Klarna worth $45 billion, that the established fintech and banking players are just going to cede the whole thing.
Dude, anyone can build it has been like the most bullish thing that you could say about any of these companies.
Why is your thing Michael Santelli? Did Santelli go on a rant today or something?
He went nuts.
What did he do?
Screaming. It doesn't matter.
Who's he screaming at?
I think it was on with Wapner and Kramer.
Oh, I missed that one. All right.
Netflix store. My knee-jerk reaction was they're out of ideas. But actually, before we get into the store, let's just look at some metrics. Okay. So Netflix revenue growth is still very solid, still growing in the 20% range. They had this really interesting charts in their last investor presentation. So they missed the forecast by the widest margin in a while. These are the diamond charts, if you guys have it up. So they missed by the largest margin in a while. And the reason why is because 2020 pulled forward. And I know that's like cliche, 2020 pulled forward.
Hold on, wait, Mike, hold on. The green diamonds are the actual global net ads by quarter.
Greener beats, redder misses.
So this red miss, where they were supposed to have 6 million in Q1, and
it was substantial. It was substantial. Biggest miss since 2019. I don't even want to focus on here because the next chart is really the coup de grace. Look at 2020. Look at that acceleration when lockdown occurred.
They pulled forward.
Nuts, right? That blue line. Forward. They pulled it all forward. So 2021, of course, it's going to be below trend.
Don't you feel like this was like easily? I mean, the stock has been in a downtrend for a year.
No, it's just dead money.
The street saw this coming. Of course, nobody should expect their 21 numbers to look like 20.
It also was up a gazillion percent in 2020. I mean, it was up. The stock pulled forward a lot of the returns as well. But anyway, this kind of makes sense. Why wouldn't they do this? Disney's got stores all over the place. Merchandise is a real thing.
What is the Netflix store? Set this up for me.
It's called NetflixShop.com. Okay. So Lupin, which is that French show. It's that French.
Netflix.shop.
What's that?
Netflix.shop.
Netflix.shop. So they're going to do merchandise based on their characters.
No brainer. It's called low hanging fruit.
Right. Sales of licensed products tied to shows, films, and characters was $50 billion in the United States in 2019. Think about what they could have done with Tiger King.
Here's what I want. You know those like varsity jackets with like the leather sleeves, like that you would buy at Planet Hollywood or
Hard
what
the
Rock
hell
Cafe?
Are you talking about, son?
You know, like those kind of jackets.
Yeah, I know what you're talking about. Where are you going with this?
I want a Narcos one, and I will wear it to like weddings and funerals. I will rock that shit everywhere I go. What show would you buy merchandise for? Would you buy like an Ozark T-shirt? I feel like you would.
I do like Ruth. I'm a big fan of Ruth.
Okay. This is low hanging fruit. I don't know why they haven't done this already.
Doesn't cost them anything. It'll generate $100 million in revenue.
And speaking of low hanging fruit and no brainer, I should mention This shirt is available at idon'tshop.com, which is probably doesn't have as many products as Netflix.shop, but we got some shit here. And there you can see the new Compound and Friends tee. And we've got animal spirit stuff. And let me just let people know who don't know, if you're a podcast listener, new animal spirits tomorrow, every Wednesday morning, as soon as you wake up.
Got a
new
good one this
Compound
week.
and Friends Friday.
You know what I learned this week? Ben does not eat corn.
What do you mean? He doesn't drink coffee and he doesn't eat corn?
Have you ever heard of such a thing?
What, isn't he from the Midwest? Isn't that in their baby bottles? What do you mean he doesn't eat corn?
Not a corn
Why?
guy.
For the
I don't know.
environment?
I said, was it the texture, the taste? He's like, I don't eat corn.
Like corn on the cob?
None of it.
Come on. I feel like he has a lot of things he doesn't do that we haven't yet discovered.
Yeah, there's more. There's more.
There's definitely more beneath the surface. All right, we plugged the shop. We plugged the podcast. Let's bring in Duncan for viewer topics.
There
Duncan
he is.
Hive, activate.
Hey guys, how's it going?
What's up, dude?
Yeah, you really started a thing with the Hive thing last week. That's
Your fans will not be silenced.
okay. So I guess starting off, we have a pretty cool question this week. We got a ton of questions, so I'll just tell everyone, sorry if we don't get to your question tonight. I do keep going back and referring to older questions sometimes. So just because we don't use it tonight doesn't mean that we'll never use it. But we got a lot of really good ones. And so the first one is kind of a unique one. It's from Anthony, who's a professional soccer player. And so Anthony writes, I'm a 33-year-old single guy with around $1 million in liquidity from playing professional soccer. I'm retiring soon and want to know what you guys would do in my situation with your finances. I'm ready for a higher risk as well as balanced portfolio for the long term when I eventually do have a wife and kids. Thank you. And so, yeah, kind of a cool, interesting question.
Hold up. What's this dude's name?
Anthony.
Anthony, listen to me. Single, 33, $1 million liquid, ex-soccer player. Dude, can I ask you for advice? I feel like you're about to crush it. The world is reopening. Hopefully you're vaccinated. I feel like you're ready to kill it. This is probably the last thing you need to worry about. So what does he want to do? He wants to start investing now prior to having his family?
I think he's basically just saying, what should he do with all this money now that will, pay off the best for him over the long term?
So on $1 million, you're not really retired, Anthony. Like, no offense, you're probably gonna have a second career, and I think that's awesome. I think actually that's what most people in your generation need to get their mind around, is the idea of having 2 or 3 careers before you actually retire. But you crushed it so far. So I really would not be. I guess I wouldn't be focused on the idea of how to make $1 million last for the next 50 years if you're in your 30s, because you're not going to be able to. I know that's not terribly helpful, but I guess I would say skew toward equities and try to find the next thing that you're gonna earn income from. Fred?
I would say, I think he's looking for financial advice. So what I would do is talk to some financial advisors, interview them, and just to see what they suggest. You could hire 1 or 0 of them, but just to sort of get a baseline, because it sounds like you're going at this, obviously you had a professional career, you're going at this from a blank slate. So maybe just talking to some professionals just to help guide you. Oh, that sounds like crap. That's not for me. This is interesting. Maybe that would be a good idea.
Is he in cash?
That's a good question. He did
says
not specify.
$1 million in liquidity.
That's cash. Yeah. So every year you're watching about 2% of that purchasing power disappear. Maybe this year 4%. You probably want to do something that's about the long term. I would not be setting things up where, hey, how much of this million can I spend each year and still be okay? I think it's premature for that. Just in your life cycle. And if you're an athlete, you're probably really healthy. You're going to live a long time. So I would be thinking equity long term and focus more on what's my second career. Okay, what else we got?
Okay, next up, we have a question from Alex. Not Alex Palumbo, but I did see Alex commenting to you, Michael. I think he was asking you to flex just a few minutes ago.
Alex Palumbo?
Yeah, he asked you to flex for the
Alex, stay out of our mentions.
But yeah, so
Not to
next
brag. Not to brag.
There you go.
What the
Nice.
hell is that? Doesn't that belong in your bedroom in a
It's
drawer?
my Bowflex. I'm working with
It's like a
10
transmission.
pounds.
Oh,
10 pounds.
that's a dumbbell that adjusts?
Yeah.
That's
Okay.
what Ben told you should sell. I see.
What are you curling right now? What weight is it set on?
I don't curl and tell. No, I'm at 10 pounds.
That's solid.
Right.
Solid.
You got to
Okay.
start somewhere. I'm not trying to get
Gotta-
hurt. Listen.
I agree. Listen, don't take fitness advice from me. All right. What do we do?
so
Duncan,
next
what
up-
are we doing?
Alex writes.
Somebody
I'm
said
reading,
that to shake weight, Lil Buffett.
Alex.
Shout out to Rachel Finswit. She said, "Oh my gosh, Mike, I don't know why you did show and tell. I feel like you're gonna get owned." In the comments.
Nothing to be. Nothing
Proud
to
of
be
my
ashamed
bluff
of.
flex.
Okay, so Alex writes, I'm reading The Deficit Myth by Stephanie Kelton. I'm like halfway through and totally sold on the theory. What's the main argument against it? Why isn't it a more prominent discussion in the political realm? It seems like we could address a lot of real world problems if we adopted this approach in our fiscal and monetary policies.
All right, so a few things. The main argument against it is runaway inflation. And it actually is a very prominent discussion. It is becoming way more and more mainstream. And I think people that are turned off by MMT don't really understand, I think, what she's saying. It's not that we could spend an unlimited amount of money. It's that the constraints are not what we thought they were. It's inflation is a constraint. And obviously there's a lot more capacity to do things with money than we thought there was initially, certainly 15 years ago, 20 years ago, and before that. So it is a way to reframe the conversation around intelligent ways to spend money. If we are going to do an infrastructure plan, we could say, okay, this is the money we're going to spend. On the supply side, the material side, can you handle all of these orders? So it's just a whole different way. It's a different mentality, but people have this bunker mentality that it's unlimited Fed's printing, it's unlimited money, they're going to destroy the dollar, and nobody's trying to do that. Nobody wants hyperinflation.
When was the bottom for the 10-year Treasury?
June,
June 2020.
I think.
This is
Why do you
important.
ask?
This is important.
I'm looking. August.
Right. The Deficit Myth came out in June 2020. That was the published date. I have this book in my house. I'm definitely going to read it. And I'm not an expert.
It's a very good read. It's an easy read.
I'm not an expert on MMT, and I'm not one of these people that like has these strident kind of like Austrian views. And I do think that there's a knee-jerk reaction amongst probably politicians, but definitely just regular people.
They're
Like
destroying our
smart
dollar. They're destroying our
smart
dollar.
people. Well, they think that, but they equate everything to how they run their household.
Correct.
And that's like a popular colloquialism that you hear from politicians when they're like they talk about getting your house in order, and
The government is not a house.
not
a
writing
household.
checks that your bank account can't back up. And
The bill doesn't come due.
well, that's her point, is that it's nothing like a house. Like this is not, you can't equate how to manage an economy from maximum output to how to run your household budget. One thing is, first of all, your household doesn't print dollars, and second of all, the liability mismatch is nothing like that either. So I think that she was advising Biden's campaign. In fact, I'm pretty sure of it, and I don't think that not enough people are talking about it. I think a lot of people are.
A lot of people are. If you want,
Over the last 4 weeks, it's been unpopular though.
If you want to listen to her talk about it, she did a great podcast with Tracy and Joe on Odd Lots. And she's not some maniac, print money, spend, don't worry about it. Like that's not her stance at all.
And maybe she's wrong, but could she be any more wrong than the inflation hawks have been for the last 30 years? Probably not. It would almost be impossible.
No.
So she's just gotten rolling with this. Let's give her a few years before we say she's definitively wrong, considering how unbelievably wrong.
I guess the thing is,
her critics have been.
The ramifications of her being wrong are massive.
Well, fortunately, I don't think we're in any danger of going all in on this and really trying a lot of the prescriptions that are popular. I think the progressives have latched on to her viewpoint because it makes it so you don't even have to win a tax battle against the billionaires to mobilize and do some of the things they want to do. But I don't think it'll be that easy, especially with President Manchin still in Congress. So, all right, that's what I think. That's enough on deficit myth. Duncan, what else you got? Anything else?
Yeah. So we just have a quick bonus question, which is
bonus.
from Bonnie. Yeah, Bonnie wrote in asking what investing books you guys would recommend to try to get her 30-year-olds to read about investing and get interested in investing.
I think I would always say a wealth of common sense, but these are 30-year-olds. They should be able to enjoy that, right?
The Psychology of Money
Oh, yeah.
is a good one.
Morgan Housel's The Psychology of Money, which has just sold its 500,000th copy
Insane.
globally, which is insane. It's one of the biggest financial books ever written. Morgan's a good friend of ours. That would be a great start because it's so relatable.
You know, it's another one, not a great title, but a great book. I Will Teach You to Be Rich by Ramit Sethi is a really, really good one if you're looking to get your kids involved in just personal finance and investing and that sort of stuff.
Yeah, so I feel like that's a really good personal finance book.
Really
and then
good.
Morgan's maybe skews a little bit more toward investing. But if you read those two books at 30 years old,
you're good.
You're going to be way ahead of most people you know. Do you agree with that?
I do agree with that.
I think that's great. We should sell those books in idon'tshop.com. We should get Ramit and Morgan to autograph them. And maybe we'll do something like that. All right, that's it for us tonight. I want to say thank you to everybody who joined us for the live stream. Shout out to all of our YouTube fans, YouTube subs. If you haven't subscribed already and you're watching this for the first time, we really get down like this. Like, this is what we do every week, every Tuesday at 5:30. So make sure you're sub, tell your friends about the channel. We have just blitzed through 75,000 subs, and we're going way north, and we love the fact that you guys are here with us along for the ride. Make sure you check out Animal Spirits Podcast first thing tomorrow morning on your bike, on your jog, on your commute. It's the best podcast there is. Check out the Compound and Friends on Friday. We'll have a new special guest, and we will talk to you guys on What Are Your Thoughts next Tuesday night. Ciao.